Good afternoon and welcome traders. Steve here with tradingforexforprofit.com, and this afternoon we are looking at the CAD yen on the 4-hour time frame. Today is September 8th, 2014. I actually entered this trade, let's see, 4 candles ago, right here on this black pullback candle. Okay, following the open on Sunday. So let me explain what we're looking at. This is the center band rejection pattern, okay, and it is combined with a break and retest. All right, the break and retest, we tell you, if you follow our system, to also watch for the center band to be rejected. Okay, so here's the bounce. Let me first zoom out so that you can look and see what's happened here. Every time that, as the market pushes up on the 4-hour time frame, every time we reach the center Bollinger band, which is a 20 EMA, we reject that level, and we continue to the upside. Okay, here it's rejected again, rather deeply here. Okay, so this was the opening candle on Sunday. I entered on the very next candle on the pullback. All right, so here's the bounce, establishing the level of resistance. A large bodied candle breaks through this level, which signifies importance at this level, because obviously a lot of traders are looking at this level either to go short or long, and they all push to the upside here, causing this large bodied candle. We then retest this level. All the stops are taken from the breakout traders that traded the breakout, place their stops right under the breakout line. The stop orders are taken right here, which will propel the market to the upward fashion here as we progress. Okay, so here's the rejection. Not only are we rejecting the center Bollinger Band, but we're rejecting this breakout level as well. Okay, this bullish spike candle right here is what I'm trading. Okay, and then a continued confirmation candle on the next candle, closing to the upside as the market closed on Friday. I'm sorry. However, I waited for the open on Sunday to see what happened, and we get this kind of push to a gap down, a push to the upside, and then there's my pullback for the entry. Okay, I just wanted to make sure that we weren't going to gap down, take stops again before I entered this market. Okay, so I am entering on a center Bollinger Band rejection pattern, which is combined with the break. Here's the break and retest. Okay, so when you see the break and retest pattern and the market moves back down towards a breakout line, as we discuss in the training course that is completely free, by the way, watch for the center Bollinger Band to be rejected. All right, so the 2 times profit target, let's talk about that. I put my stop loss 5 pips below this signal candle, which is the bullish spike, 5 pips below there, and I made my entry pullback target for the entry so that my 2 times profit target would be reached before we hit this most recent high. Okay, because that's the level that we're looking at to be retested or just touched before the market decides to do what? Break through like this, or fall off sharply. Okay, our 2 times profit target has been reached as the market pushes right through the level and continues on in a rather vertical fashion here. All right, there's a couple of things that I want to point out and discuss so that you don't get caught up in the same habits. All right, first off, what happens here is significant. Let me show you. After the market opens, you have traders, let me highlight this, that went long right here on Friday. They got stopped out. Their stops were taken here, and now they're sitting there holding the bag. They lost their position. They're looking at this and they say, wow, it looks bullish now. Looks like it's going to move up. So they wait. They see the market go sideways and then push off a little bit right here. What happens, either here or here, as the market pushes through this level that they've drawn somewhere in here, the sideways move above this line where their stops, where they originally traded, they're now doing the same, making the same mistake twice. Okay, they're taking the long order here or here, and they're placing their stop loss right below this level here. Okay, their stop loss is going to be right in this area. Okay, so what does the market do? It swoops down. It takes all of their stop orders, okay, the ones that just tried to get back in the market here, that are still holding on to the fact that this is going to go long, okay, because they knew it here, and now it was reinforced here, and now they want to get back in because their stops are hit. So they trade again right here. They put their stop here. It gets taken, and look at how vertical this market goes. There's not even a black candle as it breaks all the way up through this level. Once again, let me point out one more thing. When we discuss level and the significance, that level is made stronger by the fact that, okay, first there's a bounce, then there's a larger bodied candle, or like in this case right here, it broke and then it continued. Okay, a large body candle right at the break of a level. Okay, that just shows that traders are watching that level and they see it start to move up and they all jump on because they're all looking to take a trade. Most of them just don't know if we're going to go short or long here, and that's how they get mixed up in this. Okay, they're called breakout traders, or they're rebound traders, and they wait for what looks to be bearish here and then they go short, or they look for what looks to be bullish here and they go long. Okay, but they really don't know where to get out. Okay, that's why we don't trade on that. We trade on the pattern. The pattern completes itself for us after it comes back to the level and does something there, okay, that we like. So here's what happens. It goes sideways, they place their stop here, they go long here, they get their stops taken, and that propels the market. And if you've studied our course, if you haven't, go to our website, tradingforexforprofit.com, go to the free course, go to the stop hit pattern, and we discuss the significance of the stop hit pattern and why the market moves the way that it does following when stops are hit. Okay, so that's the first thing I want to point out. Don't get caught up in missing a trade and then trying to do something stupid. Okay, that's not a pattern. Okay, now the next thing I want to talk about is the 2 times profit target. Okay, because a lot of times, and that's why I waited for a few more candles to show you that quite often the market's going to go not 1 or 2 but 3, 4. This is over 4 times profit target if we would have went for 4 times. Okay, so when you trade something like this and the market takes your 2 times profit and keeps going and continues for 3, 4, 5, 6 times profit, maybe you'll look back in a couple days and it was 10 times profit. You get in the mindset that you want to go for more. Okay, why should I make all these trades at 2 times risk reward when I can just make 1 trade and trail the stop and get 10 times? Well, we discuss that over and over again in all of the videos that we record, and the reason for that is, I'll repeat it once again, because more often than not you're going to move your stop loss. Like right here, you would have moved your stop loss up after this break and it would have got taken right here. Okay, you would move here and you'd be okay because now you've taken some profit, but more often than not you're going to move the stop up to break even, and then it's going to be taken. Okay, that happens a lot, and if you watch these trades, you know some methodologies are that when it gets to 1 times profit you move it to break even, or maybe when it gets to 2 times, instead of cashing out you move it to break even. Well, it's not always like this where we have this vertical move and hard and fast. More often than not, it's going to come to the level that we established here, which is where we keep our 2 times profit target, and fall off and knowingly take the stops that are in place from the traders that have moved their stop losses up. The market knows, and it will find your stops. And when you have a trade that would have taken 2 times profit and now you've broke even and it's like you never took the trade, you've tied up your assets for nothing. And you've wasted your time. So that's why we don't teach that method. Okay, so this was a perfect example of the break and retest with the center Bollinger Band rejection.